Welcome to SF Commercial Property Conversations with Bruce Bean, where Bay Area investments meet expert insights. Get ready to unlock the strategies of commercial real estate success.
So good afternoon, everybody. This is Bruce Bean, and I'm talking to Francisco Sosa from Buenos Aires, Argentina. It's 6 p.m. and where he is, he's in his car, but he's talking with us today. So Francisco, we've been talking for a little while before we hit the record button, and I'm just fascinated by your story. Can you give us kind of a recap of what you told me of your history?
Okay. Thank you very much for this opportunity, Bruce, and it's been an interesting conversation. Welcome, everyone. So my story is I'm an Argentinian industrial engineer. I did a master's in science in industrial engineering here in Argentina, and then I completed my MBA in Columbia University. I've worked more than 25 years, most of my time in the financial services industry. If I break it in buckets, I could break into three buckets. A third is financial services in general. I worked in equity research department, in a bank. I work in insurance, in property, casualty, and life, actually, the two sectors. I work in a mutual fund company, actually, in New York, Skylar Kemper Investments out of New York. I work in microlending as well, in a small institution microlending. That's a chunk of my career. And then the second part of my career is I work in investment banking. I work in the US, in New York, covering global financial institutions with UBS first, and then I work with Citigroup, doing work for them in Latin America as an investment banker. And then the other third of my career, I work in private equity. I work for a telecom, media, and tech fund, work in the north of Africa, East Europe, Middle East, and South Asia. And I also worked in government. I worked a year and a half as the Secretary of Finance for the administration of President Macri in Argentina. That was between 2018 and 2019. And since a few years ago, I started a venture called Bunker. Bunker is a robo-advisor focused on emerging markets, starting in Latin America. And that's what I'm doing today. Bruce, as well as introduction.
Yeah, you were talking about the fact that the current situation, you're very high tech and more computer savvy than it sounds like most investment managers are that are coming into Buenos Aires. So you're saying that they basically are kind of back in the 1970s in terms of the way they're managing their investments for people.
Yeah, absolutely. The wealth management industry, and I will say that holds true across emerging markets. I take a giant leap, but I've lived and worked in the Middle East, and I've worked around Africa, and I'm sure the cross-border wealth management industry works the same way. It's essentially individuals that fly in from London, New York, and other financial services centers. They fly in the region, they take a few orders, they go back home, they give their orders to their assistant, and she or the analyst process the orders, and they move on. That's the way the industry works, and the industry is primarily focused on very high net worth individuals and ultra high net worth individuals, and nobody looks at the lower part of the pyramid. The reason is because those firms were really built a brick and mortar, and they haven't really evolved. They remain in the way they work, the same way they used to work, maybe in the US in the 70s. So the waves of discount brokerage disruption in the US that you had, and then anything that happened after on the front, nothing has come to the region. Nothing. We don't have the platforms we have in the US built for people for emerging markets. They don't exist really. Nobody has tried that, because there's too much. There's a lot of money in the high net worth and ultra high net worth segment, so nobody goes lower. Domestically, there's a few platforms. So in countries that have a stable currency and people can play long and go long, the local currency, you see platforms, but players that come into the region to offer the chance to invest in the US or in Europe for that matter, with technology, no, nobody's doing it. No, it's just us.
And you use Apex for your platform basically to kind of filter or work into the US with your clients.
Correct. Apex has been a phenomenal partner for us. Apex Clearing provides us clearing, and they also provide brokerage for us. They are a firm that is digitally native. They were built around serving Robinhood, and I know Robinhood is a name that today um, inspires reactions. But they're a company that provoked a severe disruption in the industry. They came around and really, provoked some movement. So Apex was the custodian with whom Robinhood started, and then when Robinhood decided that they wanted to bring that business in house because they had enough scale and volume to monetize it for themselves, then Apex decided to focus on fintech. Their solution is essentially built around technology since day one, and they are they have and they continue to be a great partner to us, extraordinary partner, very helpful, very open, very collaborative. We look for partnerships. We look for people that want to think long term and want to act long term. And Apex has been phenomenal doing it. Phenomenal.
Well, that's an interesting question. So how many folks in South America are actually using, say, Robinhood or some other digital platform for investing?
Yeah, so whoever manages to do it on their own. So what you'll see is, I'll try to break your question in clusters by age almost. So the youngest generations, the 20s and 30s, the ones that are, there's a huge community of digital nomads or individuals that work abroad from Latin America, lots, thousands, hundreds of thousands of people work for firms that are either domiciled in the US or in Europe. Those people typically will open crypto accounts. They get paid in crypto or they get paid and then they immediately go to crypto because there's it's almost like a philosophical view on life. Either they gamble it in crypto because they play on currencies that have a lot of upside potential and could go bust, or they really just stay in a stable coin, but they really go for crypto. So those that cohort, the 20s, late 20s to mid 30s, they will go into the crypto exchanges. They will invest in crypto and maybe they open an account. If they open an account, they will try to open. I'm gonna give brand names, but the names they go for. They will go for TD Ameritrade, Schwab, Interactive Brokers. That's the platforms they would their accounts in. They struggle because many of these firms are built for Americans. So you need a social security and a US phone number. So what do? They ask for a friend to lend their address and lend this and lend me that. And please don't get blocked. Can you help me? When they send you a code, send me the code. And that's the way they really hack into the institutions. Do they go into Robinhood? A few do, but not many, because they are out of the whole social networks that really people go to look for ideas and for support. Because in the US, you will find a lot of people are very well versed on the stock market and they can talk tickers. They know the price of, I don't know, a few stocks off the top of their head. In Latin America, very few people are well educated on stock prices and relative valuation. I don't know. You talk about dilution and they say, well, what's dilution? They talk about price and they think like a stock that is worth $1,000 is more expensive than one that is worth 100, just because it's 1,000 against 100. They say this one is cheap, it's 100, and the other one is 1,000. That's very expensive. And you say, well, it has to do with earnings. And let's talk about PE for a while, and they will look at you like you're from a different planet. So find a way into them, but financial literacy on the stock market is far-fetched. It's too remote. So so that's the situation.
So people with some wealth are looking for people like you that are maybe perhaps a little more aggressive about the way that you invest their funds and so forth and get returns. And it sounds like you've done very well. And so your marketing from friend to friend or person to person has worked very nicely.
Yes. I'm not going to be modest. I'll be honest. So our firm has been doing well because we are essentially a robo-advisor for emerging markets. And the market, since we started, it's a few years, the market has been doing well, other than the correction a few years ago. It's been doing well. So our clients are happy because what we did is we built portfolios that adequately follow the market, and we give our clients what they pay for. They say, I want I want to tie against the market. I don't want to beat the market. It's very difficult to beat the market, but I'll tie the market. I'll go even. To me, we usually want to win in everything we do, but tying to me in this business is good. It's great. So our clients are very happy because we give them market, and essentially if they go on their own, they have no idea what they're doing, and they typically end up losing. So our clients are happy because what we articulate as a value proposition or a promise has held true, which is I will give you market, and we're giving them market. We're giving them the return that we promised they were going to get, and markets have been in our favor. We're not rocket scientists. We build efficient portfolios. So we build them almost by the book. No, we will run simulations. We'll build efficient frontier, a curve with efficient frontier. But then we will take our time and see, okay, what do we really want to say? I mean, what are we doing here? So we'll go in depth into the portfolios that really hit the frontier and say, does this make sense? So with an interest rate cycle like the one we've seen in the last few years, well, you have to be careful where you position in the curve with long duration or shorter duration. So we incorporate those facts into our analysis. Whether you go corporate or sovereign in your build-up, we incorporate that. Whether you go large cap or small cap. So building a portfolio that is well built and well balanced takes some understanding, and that's really our value. We build portfolios that we think, and we comp against the US, actually against US robo advisors. We think we do that properly, very well. And then we let technology do the rest. We let technology rebalance portfolios, and we let technology monitor performance and tax loss harvest, and we let the technology do the tools that the things that only technology allows you to do in scale. But we're really, I mean, it's a frank observation. We're really doing the same that American would have access to, trying to bring it to LATAM. I said tax laws, that's a part that we're working on. We still haven't got that properly ironed out because tax laws rules differ by jurisdiction. And our clients fiscally reside in the country in which they live. So they invest in the US. So certain US rules apply, essentially withholding on certain distributions. But then they go back home and they pay to their local authorities. So if we incorporate tax loss harvesting, we need to incorporate local rules, and that's a challenge. But essentially, put it in simple words, we tropicalize a US-based robo advisory solution and build it for people from emerging markets. That's what we do. It's as simple as that.
So you're also trying to break into the B&B side of the equation and work with banks and so forth.
Yeah, because we see a huge need there. Pension funds around the world, I think, clearly the sustainability of pension funds everywhere is an issue, given pyramids, evolution of demographic pyramids, given a lot of factors. So I guess every country faces, to some extent, conversations and discussions about pensions, no? But in Latin America, I guess I'll say in emerging markets, it's much more brutal because one of the aspects of the conversation is whether you're able to diversify, meaning invest abroad a little bit. And when you live in a country that faces a currency devaluation like Argentina, well, you're in deep trouble. But typically, if you go across emerging markets, you'll see devaluation, annual devaluation across the board. I don't want to say that. I should check that, but it would be something that you could expect to see devaluation. Expropriation risk, you will also see it for sure. And then eventually, I guess what I'm trying to say is pension funds across emerging markets, you can have a question mark around the notion. So what you see is financial institutions trying to look for ways to give an alternative to individuals. And we, essentially, I think that what we bring is an alternative which is private, liquid. So funds are available anytime you want. We don't have holding periods, and we don't have penalties on withdrawals and so on. So liquidity, total control. So it's a private vehicle with no government interference, no subsidies, but no penalties. And that's a supplement to your pension fund. So I think institutions around the region are looking at this and thinking, well, maybe that's another ticket that we could bring. We're not going to step over pension funds. I don't want to be presumed I'm calling from a car. I'm not calling from a limousine in a fancy place. But there's a space for that, and we are talking with institutions for them to build a solution using our technology to offer to their clients an alternative. Essentially, it's for individuals looking for diversification.
So I'm assuming many or some companies in Argentina do offer pension funds. That would seem that those are the pension funds you're trying to solicit. Is that correct?
Yeah, but so Argentina is really probably the worst case in every macro conversation. But we used to have, so in the 90s, we launched our own private pension funds. They were called AFJPs, which is essentially private pension funds. And then we lived with a hybrid system in which people could opt either to go into the public sector or the private sector.
So Francisco, thank you very much for joining us. How can people get a hold of you if they would like to contact you?
Yes, find me on LinkedIn. My name is Francisco Sosa del Villa, as you saw. Bunker can be found in LinkedIn and in Instagram, and the Bunker Invest. You can find us in the two places in social media, and we also have a website which is bunkerinvest.us. So that's a way people can get a hold of us. I think we're trying to build a very interesting company. Quite frankly, I think we're bringing transparency, we're bringing simplicity, we are bringing disruption in many respects to the industry, and I sincerely think that we're gonna succeed if we at least shake the industry a bit. I think that's success to me. So whether I privately succeed and have a huge economic benefit out of it, or I don't, it's a different story. But I think as long as we manage to establish the notion of price transparency, digital experience, a good customer experience, simplicity, and technology, I'll be very happy. That to me is success for this venture. So we'll see what the future brings for us.
So that's spelled BUNKER, Bunker.
Correct. Bunker, like it's golfers would think that it has to do with a sand bunker, but it doesn't. And people that are history fans will think that it's a war bunker, but it's we really play with a U. It's an inverted A, because we're saying, look, we're not typical bunkers. We are bunkers. I guess it's.
I like it. Yeah, you're bunkers instead of bankers. So it's bunkers.com. Is that correct?
Bunkerinvest.us.
Oh, bunkerinvest.us.
Correct.
All right. Well, Fernando, it's so glad that you could join us, and we will talk again in the future. I look forward to it.
Thank you so much. Apologies for the logistics. Thank you very much for the time. It's been a pleasure to speak with you.
No worries. We'll talk soon. Take care.
Thank you very much.
We'll see you in a little while.
That's a wrap on today's journey through the SF commercial real estate scene. Ready to share your story? Visit sfcommercialconversations.com/guest. Your insights could lead the next conversation.